So the market got a huge infusion of supply this week, which was desperately needed, led by that Puerto Rico issuance that ended up being $3.5 billion. How was that deal received?
The deal was received really well. Puerto Rico indeed bumped it up by $500 million, which is quite a lot for a new issue. They ended up bringing that $3.5 billion, and it cleared really easily. They came with preliminary pricing on Monday, gauged the demand by the market, and the bonds sold really easily Tuesday morning. As a lot of people expected going in, the underwriters, the market participants generally kind of hinted going in that because of those high yields on Puerto Rico bonds relative to the rest of the market, it was going to attract some crossover buyers, people that usually buy taxable bonds, asset managers, hedge funds. And we talked to an underwriter who worked on the deal, and they said, yeah, indeed, that is what drove the buying on that, and it drove it well because they sold them out pretty quickly, and they actually were oversubscribed. There were $16 billion of orders on the deal across 270 different accounts. So there was a lot of demand to get those bonds. I mean, they're a rarity in the space right now with a lot of high yield and low issuance. So the deal went really well. What was interesting about it is that actually in the second day, Puerto Rico still continued to hold the spotlight. They were kind of hogging the spotlight through Wednesday because in the secondary, those bonds were trading really actively. They're the most active traded bonds on the day. Wednesday morning, when people woke up and came to their desks, they saw that Puerto Rico, that QSIP was taking up 20% of all market trades, which is a lot. That's on the entire secondary market. Yields shot down about 45 basis points at one point, by midday on Wednesday. So what was interesting is that going into that, like we said, retail wasn't really expected to be a large part of that, and maybe it even wasn't in the secondary. But when you look at the trade sizes, less than 100,000, even less than 200,000, it seems like a lot of those high net worth people that are retail buyers might have come in because 20% of those size deals took up secondary trading that day. So it seems like that there was obviously a lot of demand, and then some of those people that initially bought those bonds flipped them, took the profit, and got out of it. So it's going to be interesting to see how that QSIP trades. I mean, it's a huge bond, $3.5 billion. So
sure. You mentioned the retail buyer base. Retail certainly had an opportunity this week with the California GO bond offering. Retail always performs very well out in California. How did that deal was the benchmark of the rest of the market? How did that deal do? Yeah,
absolutely. And it was really a good week for issuers. I mean, they finally got, for buyers rather, buyers finally got that opportunity to have a selection of bonds. And the California bond is really just sort of, a good example of a different kind of bond they could have taken. Those are strongly rated. They came in, they did 2 days of retail that stretched across, the morning on the second day before they did institutional. And they sold $1.1 billion of a $1.8 billion deal solely through retail. And they upsized as well. They came to the market and they saw that there was a high demand for retail. California has the way they structure those bonds. They do that. They sell it to retail, and it did really well. And it actually wasn't just California. We had a lot of other issuers this week that, if you were looking at the Puerto Rico deal on Tuesday and Wednesday, you might have kind of missed what else was going on in the market. But you had Puerto Rico, you had California, and then you had Chicago, really, that also did incredible upsizing on their deal. They initially expected to issue $400 million, and they came up to about $800 million. So they almost touched $1 billion. They doubled the original plan for the deal. And then you had the Dormitory Authority of New York. Those bonds came in at the lowest yield of the week. And then we had the Houston deal, which was also pretty large. So that took up $693 million. And when we look at the yields on these bonds, obviously buyers had a lot of different options. They had those high-yielding Puerto Rico bonds they could have taken. They had the safer DASNYs. And even some buyers in Chicago, reporter Yvette Shields said that a lot of buyers that typically didn't really want that Chicago paper came out and took it. So a lot of issuers jumped on the opportunity to take advantage of the strong demand. And it was overall a real solid week for munis.
So how did the muni market handle the big infusion of supply this week?
They handled it well and took it in stride. Yields are down 5 basis points on the 10-year, 10 on the 30-year. So it's looking pretty good. And then, going in this morning, we just checked the MMD scale before we came, and yields are down about 5 basis points again. That could be sort of a following on treasuries, as treasuries yields went down yesterday, following some tension in Europe, and who knows what's going to happen there.
And what can we look forward to next week? How are we going to follow up this big week of supply?
Next week, this was a short-lived, this was a rarity. Next week we're going back down to less than $3 billion in supply, probably. So we're kind of back to the same old story, and hopefully we'll see some activity in the secondary on those new bonds that came this week.
All right, we'll see what happens. Thanks, Oliver.
Yep.